All right, so we're taking a deep dive into Pennar Industries today. And wow, you've given me some fascinating earnings call transcripts to dig into.
Yeah, there's a lot to unpack here,
Definitely.
but the thing that really jumps out at me is this isn't your typical business as usual kind of story. Pennar is making some pretty dramatic shifts in their
Yeah.
direction.
Yeah, I'm seeing that too. It feels like they're really transforming themselves in their approach to the market.
Yeah, and what's fascinating is that the level of strategic, recalibration that they're undertaking. It's it takes guts to move away from existing revenue streams,
Yeah.
to
Yeah,
say we're going to deprioritize these business units that are bringing in money right now.
exactly. It definitely caught my attention when I saw them talking about deprioritized business units in these transcripts. What exactly are they moving away from?
So they're looking at around 7 or 8 units that they're deprioritizing.
Hmm.
Things like their water treatment business, their chemicals, aerospace, and even some of their solar
Hmm.
businesses.
Oh, wow. That's a pretty diverse set of businesses to step back from. What's the thinking there?
Well, it really comes down to focus. They're essentially doubling down on what they call the Magnificent Five. And these are the areas where they see the most potential for significant, and I mean truly significant growth.
The Magnificent Five. Okay, I'm intrigued. What are these areas and what makes them so promising?
All right, so we're talking about pre-engineered buildings, both in India and the U.S. through their subsidiary Ascent.
Yeah.
Then there's process equipment, think boilers and things like that. And then we've got engineering services, tubes, and hydraulics.
So pretty diverse, but all with that potential for growth you were talking about.
Exactly. And here's the kicker. Each of these areas individually could become as large as Pennar's current entire business.
Wow. Now that's a bold vision, but how are they going to get there? Do they even have a realistic shot at capturing that much market share?
Well, that's where things get really interesting. Their current market share in each of these areas is actually pretty low, often in the single digits.
Really? That seems a bit counterintuitive. Wouldn't a larger existing market share be a better starting point?
Not necessarily. Think of it this way. A low market share in a large and growing market actually represents a huge opportunity.
Yeah.
There's so much room for expansion.
I see your point. It's like they're starting with a clean slate in a way.
Exactly.
Yeah.
And that seems to be exactly what Pennar's banking on.
So they're betting on growth, but how are they actually putting this strategy into action? What are the concrete steps they're taking?
They're investing heavily in new production facilities. A prime example is the new PA plant in Raebareli, India, which just recently came online.
Oh, right. And I saw that they're also planning expansions in the US for both PA and high-rise structures. And then there's the investments in their process equipment business as well. It's like they're building a whole new foundation for growth.
Yeah, you got it.
And this new plant in Raebareli, it sounds like that's a big deal. How
Yeah.
much of a capacity boost are we talking about?
They're projecting a 25 to 30% increase in PEP production capacity just from this one plant alone. And when you factor in their other expansion plans, it paints a pretty clear picture of their commitment to scaling up.
Yeah, definitely. So we've got this big vision, this laser focus on a few key areas, and then the investment to back it up. But what about the financial side of things? Can they actually handle this level of investment and expansion?
That's the million-dollar question, right?
Yeah.
And what's striking is that their ambitious growth strategy is actually underpinned by equally ambitious financial targets.
Oh, interesting. So it's not just about growth at all costs. They've actually thought about the numbers too.
Exactly. They're aiming for a 7% PBT margin within the next 2 to 3 years, which is a significant jump from their current 4.82%.
Mm.
And they also plan to maintain working capital days at 72 and keep interest costs as a percentage of revenue at 3.75%.
Those are some pretty specific targets. Are those typical for a company in such a growth phase?
It's encouraging to see, for sure. It suggests they're not just focused on expanding rapidly, but they're committed to doing so in a sustainable and profitable way. They get it. Growth without profitability is ultimately unsustainable.
Makes sense. And speaking of external factors, how do things like the recent U.S. election results factor into all of this? There's been a lot of talk about potential policy changes and their impact on businesses, particularly those operating internationally.
Yeah, definitely. They have acknowledged some short-term uncertainty stemming from the U.S. election, but they seem focused on the bigger picture.
Mhm.
It'll be interesting to see how they navigate any potential policy shifts and whether they need to adjust their U.S. strategy in response.
It's like they're trying to steer this ship through some pretty choppy waters.
Yeah, you could say that.
Another point that jumped out at me from the transcripts was the size of their order backlog. They mentioned record highs in several areas.
That's right. It's a really strong indicator of future revenue and market confidence. Their PIB backlog in India is at Rs 810 crore, and in the U.S. it's at $54 million. That translates to a substantial amount of business already lined up.
So we've got this company actively shifting its focus, investing heavily in capacity expansion and boasting a robust order backlog. That's a pretty compelling narrative, but I'm curious, what does all this mean for, the average person listening to this? What's the takeaway for them? Why should they care about Pennar's growth strategy?
It all boils down to potential effectiveness. Pennar is making a big bet, and if they execute their plan effectively, they could become a major player in some very important industries. This is a company worth keeping on your radar.
Absolutely. And there's one more detail they mentioned that I found really intriguing. They're exploring strategic options for the businesses they're exiting. What does that even mean? Could this mean acquisitions or divestitures? How might that further fuel their growth?
Now, that's a great question, and one we're going to have to explore further. But first, let's shift gears a bit and take a closer look at their current financial performance.
Yeah, let's see if the numbers back up all this talk of growth and transformation.
Let's dive in. That's a great place to start.
All
See if the
right.
rubber actually meets the road. Can they translate this vision into, actual financial success?
Yeah.
Let's dive into those numbers.
Okay, let's do it. What jumps out at you when you look at their recent performance?
Well, their revenue figures for the most recent quarter, Q2 of fiscal year 2025, those are pretty interesting. They reported total income of Rs 753.53 crore, which is actually the decrease of around 8% compared to the same quarter last year.
Hmm, a decrease. That seems a little counterintuitive given all this talk about growth and expansion. How do they explain that?
Well, they attribute some of it to, expected adjustments as they transition away from those lower margin businesses,
Yeah.
right? It's like, okay, we're going to take a little bit of a hit now as we replace that revenue with higher margin streams.
So a little short-term pain for long-term gain.
Exactly. And they also point to some specific factors that impacted revenue in Q2, like delays in commissioning the new Raborelli plant.
Yeah, that makes sense.
And then some hiccups in converting their U.S. order book to revenue due to the election.
Right, so some external factors at play as well. But how much of this is temporary and how much is, cause for concern?
That's the big question, right? They seem confident that these are temporary blips,
Hmm.
and they're already seeing signs of improvement. Capacity utilization at Raborelli is increasing, and they're projecting a significant uptick in U.S. revenue in the current quarter.
Okay, so reason to be optimistic. But revenue is only part of the story. What about profitability? Are they actually making more money even with that slight dip in revenue?
This is where their strategy seems to be paying off. Despite the revenue decrease their PBT, their profit before tax actually grew by 20% to Rs 36 crore in Q2.
Wow, so they're becoming more profitable even with a slight dip in revenue. How are they achieving that?
It seems to be a direct result of that shift towards higher margin businesses. Their gross margin also saw a nice increase, jumping from 38.27% to 41.84%.
Okay, that's a substantial improvement.
We can't forget about competition. The markets they're targeting are crowded. There are already some big players out there.
So it's not just about hitting their own goals, they're going head to head with some tough competition.
Exactly. To succeed, they'll need to stand out. Show they offer something unique. Convince customers to choose them over the established players.
So challenges on multiple fronts, it sounds pretty daunting. Are there any signs they're taking steps to address these risks?
Well, their focus on disciplined financial management is a good sign. Right? They're setting clear targets, working to improve efficiency. They seem to understand that sustainable growth needs a strong financial foundation.
Yeah. And I noticed they're not afraid to bring in outside help. They're working with BCG on strategic planning, and they've got consultants helping them manage working capital.
That's smart. It shows they're recognizing they don't have all the answers. And they're willing to bring in expertise to help them navigate these complex challenges. They're also building a solid leadership team, both in India and the U.S. experienced executives who know these industries.
Okay. So it sounds like they're putting the pieces in place, but it's still a bit of a wait-and-see game. What stands out to you as their biggest potential, and what's the biggest risk they're facing?
Well, they're focused on innovation and technology that's really exciting. They're not just copying what others are doing. They're investing in engineering services, advanced manufacturing, new product development. That commitment to pushing boundaries, that's where I see the most potential for real long-term sustainable growth.
I see that too. And their ability to use their expertise in both India and the US, that gives them a real edge. But where's the biggest risk?
I think the biggest risk is that they lose sight of the customer, in all this pursuit of growth and scale.
Interesting.
They need to make sure they're delivering real value, building those relationships with customers. If they get too focused on internal metrics and forget about what their customers actually need, that could really hurt them.
That's a really important point. Growth for the sake of growth doesn't mean much in the end. It's all about creating value.
Exactly.
So we've covered a lot of ground today. We've explored Pennar's growth strategy, their financials, the potential risks and rewards. It's a company on the move, making big moves. And if they can pull it off, the rewards could be significant.
It's a fascinating story of transformation, and we'll definitely be following along to see how it all plays out.
And for our listeners, we'll leave you with this. Pennar Industries is a company to watch. They're pushing boundaries. But as with any investment, do your own research, understand the risks, and then decide for yourself if Pennar is a company worth watching. Until next time, happy learning.